Hi there, this is Mikki Ramey in beautiful Charleston, South Carolina. I'm the broker and owner of Healthy Realty. In today's video, we are going to talk about what is going on in our local economy with regard to real estate. I've got a special guest who is an economist who is an expert on this subject. So keep watching to learn more. All right, so today I am interviewing Dr. Joey Von Nessen, and he is an economist here in South Carolina and works at the works in research in economics and also for the Moore School of Business at USC. So we're going to talk to Joey, who is a newer friend of mine now, and he's going to tell us a little bit about what's going on in the real estate market from the perspective of an economist. So Joey, thank you so much for taking time to talk with me today.
Thanks for having me.
Yeah, so one fun fact about Joey and I is that we are both Furman Paladins. So we have that connection. We were just talking about that a few minutes before this video. Of how we have great memories of what we think is the best school in South Carolina, even though we have some allegiances with USC now and me with Clemson. So we love the Paladins. So we're going to put that out there.
And I like to say I'm one of the few Gamecocks that can get away with wearing purple because of the allegiance to Furman. So that provides some advantages every now and then.
That's right. That's right. Well, I wanted Joey to take a second to talk to us about the current inventory crisis that we're experiencing in the real estate market. So go ahead and tell us a little bit about that.
Well, inventory has been lacking for quite a number of months now, and this actually preceded the pandemic. So inventory challenges were a problem going into 2020, and that's just been exacerbated throughout the last year and a half as a result of the pandemic, as we've seen the sizable increase in demand for housing. So this is a challenge that South Carolina faces, the US faces, and Charleston in particular, and is a challenge that we're going to continue to see going forward, certainly for the foreseeable future, for the second half of this year.
Okay. Well, that is interesting to hear what's coming up with that. And what other economic impacts besides the inventory crisis that we're seeing? What else is impacting the real estate market right now?
One of the things to keep in mind is that there are basically two different effects that we need to be thinking about in terms of informing our thoughts on where housing demand is headed. One is what we would call the income effect, and the other is the substitution effect. And we'll start with the substitution effect. And the idea here is that consumers are typically spending on goods and on services, kind of two broad categories. And over the last year, since the pandemic began, consumers have shifted and substituted away from spending on services and towards spending on goods and durable goods in particular. And so this is somewhat obvious if we think about the changes in our everyday purchasing behavior and your friends and your family. You're not going out to eat, you haven't been traveling. And so in some cases, you've been spending that money on, maybe it's replacing a dishwasher or a refrigerator or a car, or you're saving the money for a down payment on a house. And so that shift towards spending on goods and away from services. But now that the economy has been opening back up in 2021, the opposite is happening. And so as a result, we're seeing a pullback in the demand for housing in proportion to the rate at which consumers are moving back towards spending on services and away from goods. So as we move back towards those pre-pandemic norms, we can expect some pullback in housing demand that's more closely aligned with what we saw in 2019 and early 2020 before the pandemic hit. The other effect is the income effect. So that's the substitution effect. The income effect is the result of the increase in disposable income that the American consumer has had over the last year. And that is largely the result of the stimulus packages and the stimulus checks we have seen distributed to Americans, as well as very generous unemployment insurance benefits. And all that has increased disposable income and savings. And that's generated more cash and more financial resources for individuals to, again, renovate their home, or more money for a down payment, as an example. And now disposable income is returning to pre-pandemic levels. So that's why we expect in the second half of the year, as both of those return to pre-pandemic norms, some pullback in housing demand. Again, we're not talking about a contraction, but just a pullback, somewhat of a pullback to more pre-pandemic norms.
Okay, that's interesting. Another thing we're seeing in the realtor world is we see people living differently too. We're seeing people wanting home offices are huge. I've got to have a home office. I have to have a big yard. So we've seen kind of a little bit of an effect in our urban markets where not as many people are being driven to condo walkable living spaces. They want more wide open spaces with their yards, more space in their house to be able to work from home or homeschool children. So it's interesting to hear about all those effects and how it's impacting the real estate market. Okay, I'm actually going to end with what I think is the $1 million question. So Joey, if you were going to buy a house and you were trying to decide whether you were going to buy one now or whether you were going to buy one in 18 months, maybe this is a primary home or an investment property, would you want to buy something now or would you want to wait based on what you know about the economy and where you think we're going?
Well, that's a great question. I think one way to look at housing is as a long-term asset or a long-term investment. And I think regardless of how we see fluctuations in demand and price over the short run, over the next 12 to 18 months, if we think about housing as something that is going to gain in value over the next 5 to 10 years, a relatively longer period of time, which is almost certainly the case in Charleston and in South Carolina more generally, then that I think is the best way to look at it. So if you're looking at buying a house and you're looking at this as an investment in your future, particularly when you're thinking about it in terms of years, then this is a good time to buy and to think about where the fact that the market is going to continue to improve and where you want to be 5 to 10 years from now.
Yes, well, I think that's a great answer. You know, homes are about a lot more than just your financial impact in this world. A lot of it's about where you're going to put your family, and life is short. Making decisions and having a place to call home is an important decision to make. And you know,
and it's different for everyone. So it's you know, that's an individual decision that you make with your family, and you know, every household is different, and that's always an exciting but a difficult choice to make.
Yes, for sure. Well, thank you so much for your time today. And it's really great to hear from an expert economist in this field on real estate. So thanks so much for your time and have a great day.
My pleasure. Thank you, Mikki.
Thank you.